All right, everybody, let's do a quick sound check. Make sure we are ready to go. Fantasticalicious. Yeah, no, it's good to be back. We were packed up the wife and kids and went to Florida last week to Key Largo, and it's always good to get out of the bubble. Get out of the weeds, be able to step back and take a look at the forest, and you can kind of come back with a fresh set of eyes. And I think in trading, it's just critical to do that. Otherwise, it's very easy to get wrapped up, almost too wrapped up in the weeds. And so I find that that's a pretty important thing to do at least once a quarter or something like that. So anyway, good to be back. So yeah, why would you want to leave Florida? It was hot though. I mean, it was hot. I mean, Texas is hot, but it doesn't hold a candle to Florida. But okay, so let's just kind of dive into this. And this is just so you guys know, we're going to be reviewing a tool that a lot of you already have, some of you may not, but just to kind of review it, some aha moments for where we are in the current market and a few things like that. So first, welcome to everybody. I know I've missed a couple of languages here, but I try to be fairly inclusive, or at least as inclusive as I can. The main languages I speak are English, British, and some Spanish. But I try to get some others in there too. So we're going to learn about how to trade with the flow. And a big part of trading is just kind of sitting there and watching and seeing what's flowing and not necessarily trying to predict anything or, look for these hidden gems. It's just being able to understand order flow and then following it. And really that's pretty much it. So a lot of times, especially when someone's newer, they get confused when they may see, a lot of bad news hitting the market. And this was especially true in 2020. I mean, the bad news was insane. You had impeachment, trade wars, global slowdowns, geopolitics. And this year, the economic data is, starting to look better. But what's interesting is during all the bad news, the markets kept hitting all-time highs. And then in 2020, you have the rise of the meme stocks. And I love this. They shorted my stock. I shortened their lives. And that's the new trend. This is not something that in 1999, there was kind of these crazy moves, but it was more dominated by institutions where this is really showing the impact and the power of the retail trader and how many new traders are out there. And then the other thing we have going on here is that, is inflation going to get out of control? Are we going to get into hyperinflation? And hyperinflation isn't something that happens gradually. It's something that builds up, and all of a sudden you wake up one day and it's like, oh my gosh. So there's all these different things happening. And then, I could go on and on. We could talk about that for an hour, but we're going to talk about other things. So a large part of trading, even though there's things going on in the world that it's like we feel like we should know about, the truth of the matter is a large part of trading is just learning to manage ourselves. So the news, it can be confusing. For those of you that may not be aware of this, is that the news has one goal and one goal only, and that's to create anger and anxiety. So you stick around to watch the commercials, and that's it. So they're not there to inform. They're not there to, basically they're selling you anxiety. So you'll stick around for the commercials because you want to, see if they come up with anything to alleviate the anxiety. So once you kind of realize that, then you kind of realize that how worthless the news is in trying to determine what's going to happen next in the state of the markets. So I don't watch it. I don't have it on. I don't have a TV in my trading office. And in fact, in our house, we don't even have cable. We just watch, if we're going to watch something, we'll just watch a movie. So but it does make it hard to hold on to a position if that's something, you're being bombarded by that all day. But it's also hard to hold on to a position just watching it go back and forth. The movement can make traders jumpy. And it's easy when a trader has a small profit. They don't want to give it up because how many times have you been in a trade where you're making money and then, it starts to roll over and instead of going in the direction you thought, it just craters, right? And that's no fun. Here you might be up $1,000 and you're already spending that money, and then all of a sudden you're down $2,000. And the markets train you to be afraid. They train you that the next time you're up $1,000, you better take that profit because the market's going to take it away, right? That's the message that it sends, and it's the furthest thing from the truth. So while timing a trade is important, the most important part of trading is understanding the importance of what I like to call SWC, and that is simply sitting with confidence, okay? And not just blindly sitting with confidence, but knowing when you can sit with confidence, okay? Because trades don't always work out exactly the way you think at exactly the time you think. But you've got to be able to have the confidence to sit in the trade and give it a chance. But you've also got to know without a shadow of a doubt when it's time to cut bait. And a lot of times, this is something that emotionally can be very tricky, and you've got to have a non-emotional trigger to help you with this. So not only SWC, which again means sitting with confidence, while waiting for a trade to set up, but also being able to sit with confidence and not chasing and getting into a trade too late. Sitting with confidence and not jumping the gun and getting in too early. But most importantly, being able to sit with confidence while in a trade, okay? While in a trade. We're all smart when we are not in a trade. It's the moment that we get into a trade that our IQ drops in half and our emotions take over, okay? Our intellect is ground into the dust while our emotions take over if we're not aware of that, because of fear and because of greed and because of the lessons we've learned and because of the amount of times we've had our teeth kicked in. And that all starts automatically if you're not aware of it. So we want to be aware of this so we're not getting out too soon and we're not getting shaken out by the normal back and forth gyrations. And finally, we want to know when to get out when the time is right. You're not going to get out at the dead highs if you're long, and you're not going to get out at the dead lows if you're short. And it doesn't matter because there's not an Academy Award ceremony for traders who sold the dead highs or who got out at the dead lows. So we don't need to worry about that, right? But there are times to keep hanging on to a winning trade. And there are times to cut a perfectly good setup loose and move on. It's like a continual process of finding the right bowl of oatmeal. For exits, you want to think not too hot, not too cold, but just right. So I like this. Describe your perfect date. Well, that's a tough one, Bob. I'd have to say April 25th because it's not too hot and not too cold, and all you need is a light jacket. But it's kind of the same when you're looking for a way to exit the trade. So a large part of trading is making it simple. And I like to say that while I do like to talk about the macro picture and, I'll talk about things like, okay, bonds are doing this and inflation and blah, 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 blah. At the end of the day, really what I'm doing is just following the pretty colors. And after doing this for 30 years now, like when did that happen? I know a lot of things about trading. Okay. I don't know everything about trading, but I know a lot of things about trading. Not only the markets, but how the markets impact human brains, how the markets impact my brain. But I've also learned that knowing more does not mean that you can end up making more. Okay. If you don't learn how to manage your head. I've met plenty of traders who know a lot more than me about specific strategies or specific tools, but they can't make any money because they have not learned how to manage their own head. Okay. And if there's anywhere, or at least I hope and think that I've made a lot of progress over my trading career, is it's not only identifying simple tools to help me get in and out, but also finding tools that override my brain, that override my intellect, that override what I think is going to happen. Because while there's a lot of times that I am mindful and I'm like, okay, I'm in the zone, there's times when that goes away and I need a reminder of why I'm here. And I'm not here to fight the market. I'm here to flow with the market. And I want tools that tell me whether I'm not in flow. So the toughest thing as a trader is letting go of what you think might happen or getting married to a particular outcome, okay? Getting married to a particular outcome is the worst. Oh, I'm going to make $3,000 on this trade. And at $2,000, the market could be screaming at you. This is all I'm going to give you, buddy. It's time to get out. But you're so fixated, or the trader is so fixated on that $3,000, they don't see the signal, or they see it and they ignore it. And instead of taking a gain, it turns into a full stop. And so instead, what I like here is that you can actually know nothing about the markets. You can know absolutely nothing about the markets, but make a good living if you just learn to go with the flow. Now, this really sank into me when I was recently teaching one of my private clients. And so here he is. This was Dylan when he was 9. A little after he started trading with me. He's now 11. And he's adopted a different chair. But I did find that when I started showing trading setups, and for whatever reason, he's taken an interest in trading, and that's awesome. And he started trading when he was 8, and he's 11 now. And his motivation for trading is because he wants to be like one of the best Roblox players on the planet. And I don't understand a lot about Roblox. I've actually tried to trade Roblox so far unsuccessfully because I wasn't using these tools. But he's ranked like, he'll be ranked like number 9 in the world in some things just based on what he's been doing in Roblox, which is kind of cool. So over the last few years, he spent over $15,000 buying Roblox bucks, I guess Robux. And he's made all that money from trading. Like, we're not going to give him money to go, buy these fantasy bucks, but he'll sit there and set up trades and make $100 and go do it. And that's kind of his thing. So when I first started showing him things, I over-explained. I talked to him about bonds, and he's just like, and he's so funny because he's so direct. Dad, what's a bond? I don't get it. Oh, okay. So then I talk about the skew, and he's like, Dad, what's a skew? I don't get it. Oh, okay. And then I talk about, interest rates, and he's like, Dad, I don't get it. What's the Fed? I'm like, crap. So I really had to make this simple, and I had to make it actually more than simple. And one day Dylan said something to me that caught my ear, and he said, if it's green, so just hold on to it until it turns red. And I was like, okay, that was intriguing. Say that again. Now, he was referring to candlestick bars. So I thought, okay, well, that doesn't really necessarily make sense with individual candlestick bars, but I thought there is a way that could make sense utilizing some of the tools that I like to use. So, so this is a trade example from this year, and I'm going to show how I use this tool in this trade. So this is the biggest trade I've done this year, and it's also the biggest trade of my career. So I did this trade in Google in 2 accounts. One of them was Tastyworks. And in this account, I made $800,000 in Google, and right there. And then in my Toss account, which was bigger, I ended up making just over almost $4.4 million in Google. So a $5 million trade. It was really insane. And I had to hold on to it for a long time. And I had to hold on to it for a long time with a loss. But, why did I continue to hold on to the trade? And that's the question, because just because you have a loss doesn't mean the trade is bad. It just means that you got in a little early. So at what point do you cut and run? And at what point do you have the confidence that you can continue to sit with confidence in a trade and let it play out? So on this particular setup, I had this weekly chart on Google that had these green bars, and I'll talk about what those are. And first of all, the green bars gave me confidence that this setup was still valid. And then I could drill down to the hourly chart where we had the yellow bars, and the yellow bars are just saying it's not yet, not yet, not yet, not yet, not yet, not yet. And this, I was holding through all this, okay? And when you got these yellow bars on a lower time frame and the green bars on the higher time frame, that's the sitting with confidence portion. Okay, you're like, okay. It's not falling apart. Oh, good, here's another squeeze. And then right here, it turns green, and that's when all of a sudden, it's like my hourly chart is in alignment with the weekly, and then boom, we take off. And this is where I had to hold on to this trade for 3 weeks of pain, and all the gains came in 3 trading days. So that's what I mean, being able to hold with confidence, not get shaken out, and be around for the payday, okay? So the question is, now some of you may know what these are, and that's great. Well, so it's always good if you know what the tool is to review it and get reminded of how it works. But if you've never seen this before, it's always fun to kind of show this. So these are the 10x bars. So if you are already familiar with these, let's dive in for a great refresher and review. It's always good to review. You know, it's funny. I'll have clients I've worked with for 10 years, and I'll review the squeeze, and they're like, man, this time when you explained it, like I had a couple of aha moments. And that's what happens is when you revisit material again, things sink in because you've had experience it with it this time, right? You've had different, and it just starts to really kind of mind meld and integrate itself into your belief system, which is the whole key with this. Now, if you're not familiar with the 10x bars, welcome to a much easier way to manage your trades and learn to sit in positions with confidence while you're waiting for them to either take off or get a signal that this trade is no longer working. Okay. So in short, this tool looks for conviction or lack thereof. And there are two parts to this. First, there's momentum, and then there's conviction. First, let's look at the momentum component. Okay. In a nutshell, green bars mean that momentum is accelerating higher. Red bars mean that momentum is accelerating lower. And yellow bars mean that there's no price momentum. Okay. This is a neutral market. And neutral markets are powerful when they're combined with the squeeze, all right, which we'll talk about. So here's a visual of this. So if you think of the green bars just simply means that momentum is accelerating higher. And this indicates higher than normal buying demand, okay? And when I see green bars by themselves, the green 10x bars by themselves, my thought goes, okay, we should be able to at least move what's called an expected move, whether that's up to a resistance level, up to a Fibonacci level, up to a voodoo line, okay? Or if you use options and are familiar with the expected move, you know, the expected move for that week or for that day. Now, when it flips, you can see here, we start to get to red and then it kind of flips to yellow. And basically yellow is simply, it means that there's no price momentum higher or lower. No one is really buying and no one is really selling. This type of price action can be frustrating to traders. It can be frustrating to trade for people who are unaware. So if it's yellow and you're loading up on calls here expecting a breakout, it can be frustrating, right? That's when it's yellow, that's when you get the gap up and crap. Okay, gap and craps are no fun. When it's yellow, it's almost guaranteed to happen. So for directional trades, if there's no squeeze, it's best to stay away. Or if you're more advanced, you could do something like selling iron condors, because this is telling you that there's no direction here. And we're just going to ping back and forth between support and resistance, between the expected move. Okay. Red bars, on the other hand, equal momentum is accelerating lower. And this indicates a higher than normal selling pressure. Okay. In this case, you could think an expected move to the downside. Maybe it's to a voodoo line or a Fibonacci level, or the expected move is priced by options. Typically what's going to happen is this will take it right to that level. Okay. So what is this? So this is a version, this is basically taking a couple of different things. The ADX is the first component of this. So the green line down here below is the value of 20. And if the ADX is above 20, okay, if it's yellow, that simply means that there is a strong trend happening, okay? And you can see the green bars line up with the yellow ADX. When it is below 20, okay, it's red, that means that there is no trend, and that is associated with yellow. And then last but not least, if it goes back up above 20 and the momentum is negative, you get the red bars. Okay, so the next question is well, what momentum are you looking at? If you've never seen this before, it might not make sense. It's like, well, this is above 20 and it's green, and this is above 20 and it's red. I don't understand that, which is a good question. So the next piece of this is, yeah, there's a lot of wiggly lines here, is what's called the DMI. So, and this is directional momentum index. So basically, when you have the green is the positive DMI and red is the negative DMI. So for up moves, I'm interested in times when the DMI plus okay, which is green, is above the DMI minus, which is red, and the ADX is above 20, okay? So you got three things happening there. A, you got DMI plus, B, above DMI minus, C, and the ADX is over 20. For down moves, I'm interested in times when the DMI minus is above DMI plus and the ADX is over 20. Okay, so that's what designates the green bars, and that's what designates the red bars. I actually used to watch this on a chart, and which you can do. These are on any platform. You know, it's no secret. It's just very confusing. And then the yellow, of course, is simply means the ADX is below 20, and it doesn't matter if DMI plus is above or below DMI minus. It's driven solely by the ADX being under 20. Now, we've talked about momentum. And, you know, green is positive momentum, red is negative momentum, and yellow is no momentum. But what about conviction? Because this tool combines the concepts of momentum with conviction, which is why it's so powerful. Conviction comes with volume, okay? And by volume, I mean above average volume. And specifically, I mean 50% above average volume, okay? So if I see that price is accelerating on above average volume, what that means is that there's gas in the tank and this thing's going to move. Or if price is falling with above average volume, to hold on to my shorts, okay? Because that sucker's going to go for a ride. So now the indicator takes all of that and combines it into one simple visual. And this is what Dylan uses. So my 11-year-old can look at this and say, oh, great. I don't know what bonds mean. I don't know what the Fed means. I don't know what metals are doing. I don't know what inflation is. I don't care what the skew is. And I don't even know what news is since you don't let me watch it. But if it's green, I'm going to buy. And if there's dots, that typically means that it's going to at least hit my proposed target. However, when I start to see flashes of red, and I always give it 2 bars, if I start to see flashes of red and yellow, I know that the momentum, okay, and this is a 30-minute chart. I saw a couple questions on time frames. We'll get to that. The answer is you can trade this on whatever time frame you want. It depends on your style. If you're a swing trader, you're going to use a daily chart. If you're a day trader, you might use a 5-minute chart. I like to combine at least 2 time frames, typically a 30-minute chart with a daily or an hourly chart with a weekly, okay? Which is what I did with Google. So what Dylan will do is he'll buy and just stay in it, and he'll just kind of, you know, watch every once in a while, glance at the chart, and he's like, oh, yellow bars, I'm out, okay? He doesn't short. That's a, you know, I'm trying to keep things simple for him. But on something like this, you know, here's the upflow, here's the sideways action, and then of course here's the downflow. And what I really like about this is that when you see new highs like this with dots, that's such a huge clue that this market has more gas. Okay, if you see a big move like this without dots, without that volume, without that conviction, it's kind of a red flag. All right, so the dots give you that confidence to hold on. Now, if you see dots and it's yellow, it's like, okay, that's nice. But, you know, again, you don't have momentum plus conviction, right? You've got a little bit of conviction there with no momentum. And on the downside, you know, boom, you got conviction, you got conviction, you got conviction, you got conviction. It gives you confidence to hold on, but also you're not buying the dip, right? If you see red dots, if you see red bars with dots, you ain't buying that dip, you know, as I like to say. You're waiting. If you're going to go long, you're waiting for at least yellow bars to appear that tell you that the downside momentum has ended, okay? And now it's at least safe to buy the dip. Okay, so this is how the markets work, and the 10X bars naturally line you up with this, regardless of the news, regardless of your belief system in the markets, you know, any of that stuff. You know, if you got an uptrend, you got higher highs and higher lows, guess what? You're going to have green bars during the situation, okay? And if it's going to be an extended move, you're going to have the dots. And then during the sideways trend, you're going to have yellow. Now, after the sideways trend, it's either going to resume its uptrend and turn green, or it's going to start a downtrend and turn red. The beauty of this is you just wait. If you're not sure, wait for the pretty colors. If it's green, buy, after the yellow, and if it's red, sell. So that's a nice thing to do. So the key problem with all of this is that in life, having conviction is great. This gives a person fortitude to keep pushing through the hard times. As Winston Churchill likes to say, when you're going through hell, keep going. In trading, however, we must be aware of our conviction of what we think the market is going to do next. Okay, this is a fool's errand. This is like being convinced we can levitate. Just because you are convinced you can levitate does not mean in any way, shape, or form that you will be able to do so. Whether you are sober or not, you're still not going to be able to fly. So the best trades are the ones where too many people are convinced that something is going to happen. An extreme example of this is all the institutions that shorted GameStop. You had a lot of institutions convinced that GameStop was going out of business. They got too many people on one side of the trade. Okay, short interest was the highest short interest I've ever seen. And guess what? Boom, they got blown out. Their mad scramble to get out of their positions is what causes some of the biggest and most consistent moves. In other words, and this is the truth of trading, there's a lot of money to be made in situations where the crowd is wrong or where the largest side of the market is wrong. And as traders, we make the most money when we learn to submit our will to the market and go with the flow and allow the market to give us as much money as it wants. I want to say this sentence again because this is really, really important. But we want to get into the mindset where we're going to allow the market to give us as much money as it wants to give. Okay. The reason we don't make money trading is because we're not allowing the market to give us the money it wants to give us. Okay. And I know it sounds crazy, but it's simple as that. And it's like, hey, here you go. Here's the money. And it's like, no, I'm going to hold on longer. I think there's more. No, it's done. Take the money. Oh, no. I have diamond hands. I'm holding on to 1,000. No, it's done. Take the money. And, we override it with we get in our own way a lot of times. The memes confuse me. Were the shorts really wrong? Well, if you shorted GameStop at 10 and it went to 400, you lost a lot of money. So that's, there's no, whether it's right or wrong in the long term, we don't know, but they got their teeth kicked in, and that's for sure. So the idea with this is to get into opportunities. Okay, so this is a setup that I like. Here's a daily chart, and here's a 30-minute chart. Okay, and you'll notice here that the daily chart, okay, and we're getting into 480 here, right? And so what I'm looking at is right here. In the daily chart, I can see we came back to the 21 EMA, and there's a squeeze. And I'm watching the 30-minute chart, there's a squeeze. And I see right here, it's green, no conviction, no dots. And we start to go, and there's dots. And it's like, oh my God, we're going. We got a daily squeeze, we got a 30-minute squeeze. There's volume coming in. Let's get in. And you're in, you just stay in as long as those dots are going. Okay. And then, when you start to see it kind of fade a little bit, and there's not, in a momentum type move, there should be dots every bar. As soon as the bars start to fade and there's no dots, if you've made, this is a 30-minute chart, the stock moved up 40 points in 3 hours, right? That's a good day's work. In this particular trade, we did it both in the room and in the small lot account. And this day trade in the room netted $500,000, right? It's like, oh, wow, that's a pretty good day's work. And we also did this in our small account, and it netted almost $1,000. And anytime you can make $1,000 in a small account, like any account that's less than $25,000, that's an awesome trade. That's a great, great trade. So the other solid trade here that's set up, and this was last year in Tesla, and this is my favorite setup on the planet, is when you are in an uptrend. And I define an uptrend on the daily chart as defined by the 8-period moving average being above the 21, being above the 34, being above the 55, being above the 89. Okay, uptrend, uptrend, uptrend. Now, at some point, you're going to consolidate. and you get a squeeze, and the squeeze is just saying, all right, we're compressing volatility here. And you can see the moving averages are kind of messy, so it's a little questionable. Well, then we break out, okay? Now we're still yellow. There's a squeeze, but then you can see that, you're getting into this, and then all of a sudden it's like, gosh, is this thing, it's very common, right? You guys have heard of double tops, and it's like, man, we get up here and it starts to consolidate. Is this going to be a double top? It's not falling. It's not doing much. Bam, green bar with a dot. Okay. Not only did we change to green, we did it with momentum. And from here, we just took off. It was just a fantastic move. And this was a trade. We did this in the room last year, did some put credit spreads and things like that. There's a couple of different screenshots I have of this. This was $1 million trade, and then there's a bigger one that even came up with this as well. But the idea with this is to, understand when to sit, when to get in. It's just kind of like, well, am I going to short this? What I want to do? There's no conviction, right? It's not red, So, and this is one of my favorite ones, and I remember this Tesla trade, and I think this was an old high, 1429.50. This was obviously pre-split, and we gap up, and this is a 5-minute chart, and we're flopping around, and on Thursday we did nothing, and then on Friday, I don't know if you guys remember this trade. This was such a fun trade. On Friday, we kind of gap up, we trade sideways. There's a 5-minute squeeze. And then let's take some positions. And then once we broke to new highs with dots, we just loaded up. And this thing on a Friday, options expiration, went from went up, is insane. It was $120 in one day, 8%. And the thing is when you're in this move and you see the green bars and the dots, okay, guess what? You don't have to fear this. Look at this. We had the gap up, right? You had the gap up, one dot. After that, no dots. If there's no volume on the subsequent bars, it's over. On those gap ups, you get the hell out of there. Pardon my French. Okay. But if it breaks out, so if it breaks out with no dots, you're kind of taking your profit right away, because a lot of times that's a false breakout. It's designed to be a bull trap and suck people in and rip their heads off. But if there's dots, there's convictions, that means there's gas in the tank and the sucker is going. Okay. You don't get shaken out of that. You sit with confidence. Sit with confidence, right? And you don't need to be looking at the news. You don't need to be looking at Twitter. You're just looking at this tool to help you stay on that path. So another one here, this is an hourly chart, and again, pre-split, and okay, so Tesla's going down, it looks bad, and then boom, there's news of a stock split. Oh my gosh, stock split. And this thing's going, it's going nuts. And because there's dots, we can chase. Okay, so when do you chase? Right? When is it okay to chase? Oh my God, it gapped up. It's already up $30 on the day. Well, it's got green bars and dots. You can chase that. That's telling you that there's momentum, right? And this, I believe, this turned into last year was my biggest trade of last year. And if you guys remember this, what happened during these 2 days is that TOS went down. So I had to manage this on my phone. And so on my 1,000 shares of Tesla, caught 257 points. And then on the debit spread, which is a 500 contract debit spread, it was just over $3 million. So it was a $3.7 million trade. Now I cry a little bit, because if I had just had the calls, it would have been an $8 million trade. Obviously, I lost money here. But to be honest, holding a big trade is harder to do just with calls. If I do it as a spread, it helps me hold on during the wiggles. Okay. If I'm holding on to a small trade, 5% of, 2% of my account, okay, I can do a call. But if I'm doing a 20% trade as calls, that can be very stressful. So instead of doing, say, 200 calls, I might just do a 500 contract spread. So that's how I manage my own stress during that period. That's funny. So, and this is our small account at the time. and we did an $11,000 trade in the small account. It was insane. I mean, it was just, biggest trade we've ever done in the small account. So a large part of trading is learning to manage expectations versus reality. When we impose our expectations on a trade, quite simply, we ruin the trade. Okay. And this is true of anything. If we impose our expectations on our children, we ruin our children. If we impose our expectations on our spouse, we ruin our relationship with our spouse. The list goes on and on and on. Expectations rob a trader of fully appreciating their reality. We don't appreciate the $500 profit when we are expecting a $3,000 profit. We don't appreciate the $500 profit when we compare to what could have had, what could have happened. So versus just flowing with the market, right? When we project our own expectation on the market, if you think about it, it's the most asinine thing we could ever do as a trader. Yeah, we can have a target, right? It's okay to have a target, but you got to be able to understand at what point is the trade done, and you got to get out early, okay? And at what point is it okay just to hold on through the wiggles? That's so key. That's why people get nervous. So if it hits the target, you make $1,000. You're up $500. It starts to turn. Oh my God, I'm getting out. I'm scrambling out. I make $300. It comes down and it goes to our target, right? Or we get to $900 and it starts to roll, and then it actually comes down and hits our original stop. And so instead of getting out close to our original target, we hold for the full stop. You don't want to do that either, okay? And the bars help you with both. Because the bottom line is we have no idea what's going to happen with the markets, okay? And anybody who tells you they know what's going to happen next with the markets is lying, whether it's GME, AMC, or Bitcoin, okay? Oh, don't sell Bitcoin, it's going to 1 million. Nobody knows that for sure, right? Don't sell AMC, it's going to 1,000. Nobody knows that for sure. It is up to you to guard your own account, okay? It's your responsibility to guard your account. So the bottom line is, in trading and in life, our expectations can create significant stress when they don't match up to reality, which then creates lapses in judgment and bad decisions. Now, this is a weird thing because it's good to have high expectations in other areas of your life. If you go into a hotel, you should have expectations of how the experience is going to be. And if it doesn't meet those expectations, either you have management correct it, or you don't stay there again, right? It's okay to have expectations in a lot of areas, but the only expectation that works in trading is that you're going to follow a trading plan, okay? That's it. And in this case, it really maps it out for you. So we don't want our indicators to give us conviction, okay? We want our indicators to give us not conviction, but confidence. Confidence to hold on if the pretty colors are telling us it is fine to hold on. And no shame in getting out if the pretty colors tell us the trade is no longer viable. This is probably the hardest thing in trading, is to take a loss without any shame, okay? Because all that crap comes up. It's not working. Oh, my parents were right. I'm a loser. Blah, 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 blah. All that repressed crap that we all carry. And, you try to release it and try to release it. And there's ways to do it, which I'm a huge fan of. But the idea with this is that it replaces all that psychological BS with a signal. And the signal saying, oh, it's time to get out. Okay, there's no shame in that. There's no psychological BS you have to deal with. You're following your plan. You're following the tool. And the tool's telling you to get out. Oh, okay. I'm that's all I'm doing is I'm following my plan. So there's no reason to be ashamed, right? Because that's the thing that trips up traders the most. We all have, the crap that triggers us and stuff like that. And in trading, it will ruin you. It will absolutely ruin you. And I've been doing this long enough, and I've watched enough people trade that it is the 1,000% conviction that what makes or breaks traders is their mindset. I'm going to give you this great tool, will help you with your trading, but you have to follow it, right? You can't override it with your psychological baggage. Okay, so the secret to trading is agility without the baggage. So you got to shut down your brain. All right, shut down your brain, because the unimpeded mind is, talking about anxiety, being scared, failure, blah, 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 blah. Get into a state of mindfulness where you're not really thinking of anything. Maybe you're just, so Mark Douglas, I worked with him quite a bit. And the thing he had me do is like, okay, if you want to reset, close your eyes. You don't need to meditate for 20 minutes. And for 5 minutes, what I want you to do is count to 4. 1, 2, 3, 4, and then back to 1. 4, 3, 2, 1. Do that for 5 minutes with deep breaths, and then go back to trading. And what happens is you're just clearing your mind. You're getting back into the present. And again, what's nice is that even if you have all that stuff going in your head, if you can still follow the pretty colors, you'll be okay. So another trade in Tesla, news came out that it was going to be added to the S&P 500, right? And it's like, oh my gosh, this thing is going crazy. And so the 10X bars, so boom, we're yellow. Remember, yellow is just like, what's happening? Is this going to roll over and die? Or is this going up? Boom, green bars with dots. Okay, it's okay to grab that, especially if there's a squeeze. If you missed it, fine, grab it. As long as there's dots, you're going higher. Okay. And I always like the saying by Paul Tudor Jones, there's no training for the last third of the move. The first 2/3 of the move is pretty easy. The last third of the move, you're scaling out. And when you see it's the last third of the move, is simply, oh gosh, we're getting a pullback here. I'm going to start getting out. Maybe you get out all of it here. Maybe you get, but at least you start scaling out. No dots. And, this was a, what did I do on this one? Yeah, that's right. I had the call debit spreads, yada, yada, yada. And that was a solid trade. Okay, so what is the 10X bars cheat sheet? Green bars equal normal expected move up. And by expected move, again, I just mean, normal resistance, Fibonacci levels, voodoo lines, clusters, stuff like that. Green bars with dots equals the potential for a greater than expected move, something that could plow through resistance. And that's really a key here, is that the dots show you that there's conviction with the momentum, and that scenario can plow through resistance. Okay. And on the downside as well with red bars. So if there's red bars, no dots, normal expected move to the downside. Fibonacci level, voodoo, support, etc., etc. However, if there are red bars with dots, you got bigger potential for a greater than expected move down, right? That's the kind of stuff that here's support, it's just going to blow through it. Or maybe it has a little bounce and then keeps on going, okay? When there's red bars with dots, never, 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 never buy the dip, because you are catching a falling piano, all right? At least wait for yellow bars. Yellow bars mean there's no momentum either way. There's no momentum to the downside, no momentum to the upside. You're just bouncing back and forth between support and resistance, expected moves, etc., etc., etc. Yellow bars with dots, still no momentum, but you get a short-term pop. Maybe just you breach resistance, but it comes back down. Okay, conviction without momentum. So, in general, if we're looking at this and you're using just these as an entry, you got red bars. So at point number 1, you got green. So great, take a long stop at the lows. And then at number 2, you got some conviction, like, okay, this thing could turn into something a little bit better. Awesome. And you got, okay, let's go. So these green dots are really powerful. You're not even retracing. You're grinding up. You get a green dot. It's showing you that people are chasing the move to buy it, but also stops are getting hit on the short side. That's beautiful. And then boom, boom, boom. Now, point number 3, you get some red bars. If you want to give it a minute, that's fine, because at this point, you're trailing up your stop. You've got some profit. But, once you get into like what I call it, 3 bars in a row at a minimum on a shorter time frame, like a 30-minute chart, and it's like, okay, we got, I don't see any green. I don't see any green. Just get out. And especially is this next to a voodoo line or something like that? Get out. Now you're waiting. Okay, this is waiting. maybe you want to sell iron condors, outside of the expected move if you're using options and you're just waiting. Is there a squeeze forming, et cetera, et cetera? Is this thing going to continue going higher? Or so I keep talking about, I think the market's going to roll over in a couple of weeks. This is exactly what I'm going to be looking for. Oh my God, we got red 10x bars. We've been looking for a down, let's short with stop at the highs, bada boom, bada bing. I'm actually expecting that could turn into a big trade, but I'm not married to that idea. If suddenly these turn green again, I'm out, right? So what I love about 10x is that it's not about your expectations. It's about asking yourself, are the conditions true or no longer true? And that's it. If it's green and you're long, are the conditions to be long true or no longer true? If it's still green, it's true. If it's green with dots, it's even more true. If it's yellow, it's no longer true. Okay, this is not about fear and greed or happiness and shame. It's true or not true. And there's no interpretation, is what I love about it. So we can stay in a trade as long as the conditions to be in the trade are true. Okay, so if the bar turns yellow or red, the condition for being long is no longer valid, so we exit, and vice versa, and that's it. And then, of course, yellow bars are neutral, but yellow bars with a squeeze is a great trade, okay? Yellow bars represent no conviction. A squeeze represents a buildup in volatility, and that squeeze is going to either punch that to the upside in an uptrend continuation or to the downside, if you're familiar with the squeeze. So I actually love yellow with a squeeze, because yellow means that, okay, this thing, because when something turns from yellow to green, it often has a good run. It's like it's rotating back into conviction after a break. Okay, so with momentum, look for expected moves, support, resistance, fib levels, voodoo lines, et cetera, et cetera. With momentum plus conviction, the dots, you have a high probability of blasting through the levels on your screen. Remember, those levels on your screen, the market doesn't see them. They're just lines on a chart. And so if there's no conviction, those levels will hold because everybody's watching them. But if there is conviction with momentum, you oftentimes blow through them, and that catches a lot of people off guard. So the only way to make real money without the money puts is if there's going to be a greater than expected move. So on the downside, on short sides, if the daily chart suddenly turns red, that's great. I'll buy some 60-day out Delta 30 puts because we know that the downside can start accelerating pretty quickly. And as long as the bars are red, I'm going to hold on to those puts. But if it turns yellow, I'll close them out and I won't go seek therapy. Okay, I'm just following a trading plan. I'm not generating fresh shame for my subconscious to review, right? So anyway, momentum plus conviction equals awesomeness. So this is an example. We've been talking about long side trades simply because there's a lot of long side, bullish stuff. But this is kind of what I look for on a downside trade. So, you had a downtrend. Now we're consolidating. We're yellow because it's no longer going down. Here's a squeeze. Bada boom, bada bing. And, Netflix goes from 505 to 485. That's 20 points really quickly for a day trade. And if you're using leverage and using options, that can turn into something pretty sizable pretty fast. And that turned into a $250,000 trade just holding it for 2 trading days. And that's what I talk about this stuff, is just wait for this stuff. It's not like, oh my God, that stock's moving, I got to get it. No, this is a specific setup with a high probability of success. That's what I want. So this is your instrument panel to navigate the markets. I feel like I could have probably borrowed that from TG. But what I like about this is that, he's looking at his screens here and it's just like, what do I do? Do I go left? Do I go right? But I like this analogy for this particular tool. What's great about this strategy is that you can do it from your phone. It's not complicated. If you're at work, or I've done trades on an airplane, I'm not saying that's a good idea, but there are sometimes, especially with the indexes, when it's like, oh my God, it's turning, I have got to do something about that. So I'm always a big fan of there's only one job as a trader. Okay. As a trader, literally, you only have one job, and that is to create an equity curve that goes from the lower left of your screen to the upper right of your screen. Okay. And that's it. Obviously, not every trade's going to work, but if you can minimize the downside and capitalize on the upside, you're going to have a great year. My trading tends to look like this: grind it out, grind it out, grind it out, some ups and downs. My goal is to make 2.5% a week, and then boom, catch a nice move. And then grind it out, 2.5%, 2.5%, blah, 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 boom. And for me, that works really well. I think that in any market condition, you can make 2.5%. It doesn't mean you're going to make it every time, but on average, like 1 week you may make 3.5%. The next week you may lose 1%, right? But the key is you're not losing 30%, right? You're not doing anything insane like that. This is just so we started tracking this last year when all this started hitting. So in June of last year, I had my first $1 million trade in my career as a trader. Well, my first $1 million trade was actually gold bullion, and I started buying, but that was like a 10-year trade, and I started buying it in 2002. But my first $1 million day trade and on a screen trade was January 14th, 2014, and I remember that day very clearly. And then after that, I didn't have any big trades like that for a while, and I don't know really why. It's just I wasn't trading big. I'm just like, you know what? I'm gonna make my 2.5%. And then on June 10th of last year, I had $1 million trade. And then on July 10th, I had another $1 million trade. And then on August 18th, I had my biggest trade at the time, a $3 million, almost a $4 million trade. August, another $1 million trade. And these are all Tesla because Tesla was setting up well. And then this year it's been Google. I've had a $5 million trade on Google and another $1 million trade on Google, and then also have a pretty decent position going on in gold and stuff like that too. And so I look for that stuff just because, well, my perfect portfolio size, I don't want to have 30 trades. Okay. I like to have about 5 trades. And I'm looking for income. I'm just like, all right, give me my 2.5%. And then is there a big potential trade there? I personally cannot manage 15, 20, 30 trades. I would rather manage 3 big trades than 20 small trades. All right. And it's just what I found works good for me. So for 2020 was my best year ever. And the, percentage returns were phenomenal. I had my TOS account started at almost 1.4 million, ended at 17.6, had some really sizable profits there. And then if I combine that with TOS, with Tastyworks, because I funded my Tastyworks with my TOS profits, and it turned into a 1,200% return. My small account went from 10 to 54. And then these are quick screenshots here. So this was, and I'll show you how I'm doing this year too. So this was December 31st. $16.5 million in profits in TOS. I'm a huge believer, obviously, in wiring out money. And this was December 31st in Tastyworks. $1.475 million in profits. And then, so for this year, so what did I do this year? So for this year, my current P&L, and I'll show you statements. So I started with a bigger amount, and I'll show you that. So dollar-wise, I'm almost to where I was last year, but I started with a bigger accounts. So my percentage returns, 274%, Tastyworks. And these are the trades I call out in the gold room. And then the small account is designed to be a little tighter, and it's 44% this year. So screenshots, I just took these right before we started, and I'm happy to show them live too. So my starting balance was 4.8 million. My P&L year to date is 10.5 million. Let me see where it is right now. I mean, of course, the markets are moving, of course. So that says 10.555 million. If we look at my live account, there's the clock moving right there, 10.564 million. So up a little bit. Silver has been a pain. Google's been solid. NDX has been solid. Anyway, that's my portfolio. That's my gold room portfolio. I have this account. I do wire money out, things like taxes, buying gold bullion, buying crypto, renovating a house, buying property. And so I do wire money out of this account. And I do need to wire some more money out next week for the quarterly taxes coming up, which is exciting. For Tastyworks, I have not wired any money out of this account. It started last year with 200K in August and is currently 6.2 million. So this year up 4.5. And same thing, these are kind of the gold room trades as well. And then for small lot, it's up 17,000 year to date. So this carried over. It started at 38,000. And then what I do is when I get to 50,000, I reset it back to 10K. And now we started at 10K back in, I think, at the beginning of May or something. And now it's almost back to 14K. So what I like to do with this one, this is my small account mastery. I go from 10K to 50K, and then I reset it and go back to 10K. And I do this because it's skill building. If you can do a 10K account from 10K account to 50K is hard. And if you can do that, it sharpens your skills and it makes you a little bit pickier when you're doing trades in a large account. In a large account, if you're not careful, you're just going to start flinging mud at the walls to see what sticks, and that doesn't work. In a small account, you can't screw it up, because if you go from 10K to 5K, it's a lot of work to get back to 10K. So it's a very precise, very, very precise way to trade. Okay, so at the end of the day, I am a trader and I don't mind sharing what I'm doing. I don't know why I like doing that. At some point, I'll stop sharing because my life will be way easier then. But, and I'm not a perfect teacher and I'm not big into selling stuff. But, we're presenting stuff here as a group. And to do that, it's a business, because, you got to pay for things like ads, and you got to do, there's things like payroll, and I'm super proud of the business and the team that we have. And I think, at least from the feedback we get, we are helping a lot of people. We are changing a lot of lives with the instruction and the tools we put out. And I love that. So, so here's the deal with this. So I'm not going to do, so I've done a 10X trade class before. So I'm not doing a Saturday class or anything like that with this. But what I am going to do is that I'm going to do 2 live trading days. From 12 to 3 on June 14th and June 15th next week, to show you how to do this in real time. And we'll set up swing trades, and we'll set up some day trades. And let's see. Oh gosh, you know what? I'm going to come back to all that. I messed up here. Okay, so what we're doing here, I moved the slide to the end. If you already have the 10X bars, obviously you do not need to buy them again. If you don't have the 10X bars, I would say this is probably the #1 factor that will improve your trading for the rest of this year, and honestly the rest of your trading career. I think hopefully I've shown you how, I hate to use the word term easy, but it strips away all the BS and just shows you order flow, right? It doesn't matter why something's going up. It doesn't matter why something's going down. What matters is it going up with momentum? Is it going up with momentum plus conviction? Okay. Is it going down with momentum? Is it going down with momentum plus conviction? Or is there no conviction at all? That's all you need to know. And if you have that information, that's all you need. You don't need to know why. That's the question that I get the most. And it's the least important question anybody's ever going to ask me in my entire existence. Why is that going up? Who cares? More buyers than sellers. If that makes sense, because there's things sometimes that don't make sense. Well, why is that going up or why is that going down? I mean, honestly, a lot of times it's because there's some fund getting blown out, right? The reason why is this idiot over here over leveraged, and it's done now. A big part of why crypto is falling is because there have been over 1 million accounts blown out, where people at the top, all of a sudden, they decided to get Bitcoin at 60K and they used 5-to-1 leverage. And as it started to come down, the brokers or the exchanges started flushing them out. That's why we've had the move down, okay? But it doesn't matter why. But it's just, that's how it works. All markets move the same because it's human beings. By the way, I do think Bitcoin will be a buy at 28K. I think it'll start to form a bottom there, and then we'll start seeing it go back up again. But guess what? I'm going to wait for the 10x bars. I don't need to guess what's going to happen there. I can just throw on the 10x bars on Bitcoin. And, if I'm looking at the hourly chart, or, this is the weekly chart. I mean, the weekly chart's red, right? I'm not buying this. The hourly chart is red. I'm not buying this. So, I'm going to wait for these to mellow out, mellow yellow, and then I'll start doing it, right? So it just makes it a lot easier. Okay, so what is this? So, so first of all, if you are interested in this, you can type this into your browser, www.simplertrading.com/10x, and it'll come up with a page that looks like, well, it doesn't look exactly like this, but it'll give you these options. So if you want the tools, by the way, are $597, but up until June 16th, you can get it for $200 off and get it for $397. All right. So this basic package will get you the 10x bar tool and an indicator setup session with Duncan, which is priceless. Like, if you're not familiar with how to set this up, Duncan will set you straight. Now, I'm always a big believer in seeing something in action. So let's say that your boss says, hey, can you play golf with us on Monday? Scott had to drop out and we need a fourth. Now, if you're an ambitious person and you're trying to get in good, your only answer is going to be yes. So you go home, you read 3 books on golf, and now you're very knowledgeable about golf. So how do you think you're going to do that first time you tee off? It's probably going to be a disaster because you don't have any practical skill swinging the club. And golf is a game where you have to learn by doing. You got to actually swing the club. But, there's a saying that practice makes perfect, and that's not true. Perfect practice makes perfect. If you swing the club wrong, you're going to develop bad habits. If you're swinging the club with an instructor watching you, that can say, hey, you need to drive that shoulder back more and you need to loosen your grip. That's going to set up a routine where you become a good golfer. So it's the same thing in trading. I have no problem putting my money where my mouth is, so to speak. I will trade my own accounts live right in front of you and show you the results using these tools because I have confidence in these tools. Does it mean that every trade's going to work out? No. But do 75 to 80% of them work out? Yes. And so that's what we'll do here. So the 2 days of live trading, that'll be June 14th and June 15th. Now, what the Elite is that you also, in addition to getting the tool and getting help with Duncan and doing 2 days of live trading with me next week, you also get the course that I did on this a couple years ago. There's an entire strategy class of 100+ slides that lays it out. Okay, here's what it is. Here's how it works. If you're newer to options, there's an Options 101 class, okay, to get you up to speed. And then there's 3 days of recorded trades from a couple of years ago, so you can see how it worked in a different set of market conditions, which is also important. And then there's a back to basics class, and then 3 of my personal step-by-step checklists. Okay, so that's what the Elite is. All right, so let me come back up here real quick. So, there we go. Okay, so, the 10x bars, that's basically what we've talked about. So you guys should know what that is. Again, that's $397, the basic package. And up until June 16th, you can get it for $397. On June 16th, it goes to $597. So you can save some money. We're going to do 2 days of live trading. It's going to be from 12 to 3 Central on June 14th and 15th. And this is where you can ask me questions. I'm going to show you exactly how I do this. I'm going to show you how I use it with like the squeeze. I have no idea what the market conditions are going to be there. I'm hoping we're going to be able to short some indexes because I think the markets are going to start to sell off next week. So I think the timing is really good for this. But again, I'm not going to impose my will on the market. I'm going to let the 10x bars tell me what to do. And, answering your questions, got all that kind of fun stuff. And then the elite package also includes a lot of great stuff. So not only do you get the indicator, not only do you get the live trading, but you get the actual strategy class that I did a couple of years ago. And this also includes the live trading I did with that class. So you can kind of sit back and see how it worked in various market conditions. I think that was back when Tesla was $400. I don't remember if we traded Tesla on that one or not. But, the 10X bars, it's the 10X bars and the squeeze. Last year was my best year trading by far. And this year, I don't know if I'm going to beat last year percentage-wise, but dollar-wise, I should actually beat it simply because I started with a larger amount. But really, it comes down to not I'm not staring at the news all day. I'm just watching the 10X bars. I'm following the pretty colors to the promised land is basically all I'm doing. And that includes the 3 days of live trading that I did during that class, a back to basics class, and this is things like option Greeks, really to kind of get you up to speed if you're newer to options. The checklist, those always prove to be very popular. And I got into this when I would, many years ago, I would sit next to mentors or, traders who were really good at what they did. And, a lot of them had a simple one-page checklist. And it's basically, it was their roadmap. And I remember this because, what I was surprised is how much they didn't do, how much they didn't look at. And they weren't, looking at all these different markets or looking at the news. They had a checklist. It's like, okay, if the S&P does this, and then if they saw something, they would refer to their checklist. And I'd ask them, like, well, you've been doing this for 20 years. Why are you looking at your index card? And he's like, it's so easy to get caught up in all the BS. I got to make sure I'm following my plan. It's like, oh, that's really cool. So that always stuck with me, and I think that's really important. Now, here's a question that'll come up. You may already have the 10X bars, and you're thinking, like, I don't need to buy those again, but could I just do the live trading? And absolutely. So call us or send us an email, support@simplertrading.com. And if you just want to do the 2 days of live trading because you've already got the 10X bars, totally cool. And they will take care of you. And also, one thing that's kind of cool, this is something that I think we were able to start using last year. But, if you're like, but my budget's a little tight right now, so the question we get is like, could I do this later? My budget's a little tight right now. Well, I don't, we only do these, at the time. So I'm not going to do this again. We're not doing the special again. But you can do something called PayPal Credit, and it's $0, 0 interest for 6 months. Pay back as much or as little as you want, 0 interest. And then after 6 months, they'll charge, it's a nominal interest rate. It's not insane. It's really cool. I know some people have done this, and then, they pay it off with their trading profits, which is great. Obviously, I cannot guarantee that could happen, but it's happened quite a bit. So what you do is just go into PayPal and choose PayPal Credit, and you'll be off and running. Now, again, if you decide to do this on June 16th, the price will go up. So my recommendation is, if you're looking at this, just do it before June 16th, okay? And then I'll stick around and answer questions for a few minutes. But again, a quick review, the basic package, you get the indicator and the indicator setup. The Pro, you get the indicator setup, and the live trading. And then the elite package, you get all of this plus the entire class that I did on this a couple of years ago, which includes an entire 4.5-hour strategy session, Options 101 class, in case you want to get up to speed in options, 3 days of live trading that I did during the class, which is really valuable to look at because it's good to understand different market conditions, and a back to basics class, and all my checklists. So the elite's really a solid deal if you're really serious about this. And again, just go to simplertrading.com/10x. So happy to look at a couple of things. So if we look at Amazon, Amazon's a stock here. It had a huge day today. And if we look at the weekly chart, it's really, really bullish here. You got the green 10X bars, You got a squeeze. You had the hourly chart fire off today. And then if we look at the daily chart, what I've been looking at on the daily chart, you can see we're still yellow. So we're still in no man's land. So I've been kind of watching, it looks like it wants to get going, but it's still a lack of conviction here. So certainly keeping an eye on that. Let's see, what was one here? So this is one. So this is one we have in our small lot. And so why am I holding on to this? Well, there's a weekly squeeze, and the weekly chart has green 10x bars. And what we've been waiting for is the daily chart to go from yellow to green. And if this goes green and lines up with the weekly, this thing's going to explode. Okay, and so I don't mind the yellow as long as the higher time frame is green and we got squeezes in the house. Okay. Anyway, and we'll do a lot of this, guys and gals, during the live trading. This is what the live trading is about. We're going to analyze charts. Why are we getting in? Why are we passing? Right? And we're going to take trades. You can buy the stock. We'll do different option trades. If you're going to buy a call, which one do you buy? How far out? Is it better to do a spread? Et cetera, et cetera. So we'll do all that during the class. Whew. Okay, so it is 8:13. We have been hanging out together for 1 hour and 13 minutes, which I think is right about the right time. And I want to go ahead and wrap this up. And yeah, a lot of good questions. We looked at a couple of charts there. I think, a lot of this presentation is pretty self-explanatory just in terms of I think the aha moment that the tool can do. And for one, I love sharing this with people who've never seen it before. And then if you have seen it before, it's always fun to live trade together and kind of rediscover the indicator if you haven't been using it lately. And yes, we do have, and they are on Tasty as well, by the way. All right, guys. Well, I'm going to leave this up here. And I'm just going to circle this. And then let's call it a night. And for any updates, if you're in small lot, we'll be doing live trading tomorrow from 12 to 3. In the gold room, I will post any updates to my trades. And for those of you signing up for this, I will look forward to the live trading with you next week on the 14th and 15th, which will be a lot of fun. You guys have a fantastic evening, and I will see you on the other side.